or 52.8%. For decades, Nigeria has significantly relied on imported refined products, that's petroleum products, a situation that has not only strained its foreign exchange reserves, but also exposed its vulnerability to global price fluctuations. This is because the country's state-owned refineries, with combined capacity of 445,000 barrels per day, have consistently operated well below the potential, forcing the government to rely heavily on imports to meet domestic demand. Experts say the Dangote Refinery's arrival is coming at a critical juncture, as this is expected to significantly impact the country's landscape. For more perspective on this, I'm being joined by the Chief Executive Officer of AHA Consultancies, an energy expert and analyst, Mr. Ademola Adigun. Good afternoon, Mr. Adigun, live from our Abuja studios. Thank you for your time.
Thank you very much. Good afternoon.
Yes, it's been a while, and really it is good to see you. And I must say, all of this while, we've been talking about Dangote Refinery coming on stream, and just a few weeks, according to the chairman of the group, saying very soon PMS will start to come out of this facility. We are now seeing issues popping up. IOCs are coming up with some issues. We see issues around crude oil supply. We see issues around licenses for dirty fuel. What is your reaction to all of these issues surrounding the coming of Dangote Refinery?
So the first thing to say is Dangote did a big deal for Nigeria, investing in refineries. Refineries are not very profitable. It's not the very most profitable part of investments. Typically 1.3, 1.2 returns annually. And the refineries in Africa are more profitable than the refineries in Europe. And refineries are affected by the price of crude oil. Once crude oil prices rise above a certain level, refineries don't make money anymore. So Dangote investing in refineries is a big deal, and it's something we should applaud. But the second issue, which has been dominating the airlines, is crude supply, availability, and things like other theories of conspiracy and others. I don't think that is actually the problem. The bigger problem we have in Nigeria is insufficient crude to give to people who need it. A country that's supposed to produce 2.1 million barrels, that's barely doing 1.3, can't service all the needs of the market. I mean, the agreement the government, NNPC had with Dangote was 300,000 barrels per day supplied to the refinery, not 655, not everything. NNPC should fulfill the agreement. Why NNPC can't fulfill the agreement is a myriad of other issues. Exactly. IOCs by nature and by their definitions, I mean, there are two major contracts. I mean, they're service contracts, but the PSC JV contracts has the Nigerian government as a major shareholder in these areas. In PSCs, government take is almost 90% in some fields, and in the worst field, maybe 75%. So the crude belongs to the government in most cases. In joint ventures, I mean, cash call issues, which has been dealt properly with some extent, also limits the crude available to the government. So the issue is insufficiency of crude. So there's no conspiracy from my perspective on supply issues. Is right now, because of oil theft and other issues, we don't have enough crude to give to anybody.
Well, can we highlight the economic benefits of developing local refining and, of course, how that can enhance economic development?
Well, the biggest deal is for the opportunity cost of selling your crude outside the country is almost like 1,000%. For every barrel of crude you don't refine locally that you sell outside, you lose over $1,000 in profit. So it's really profitable to refine your crude in your country. So the economic benefits are massive. And then beyond that, I mean, if you've been to the refinery and you see the sheer number of workers that will be employed there or already employed there, the shared dependencies, codependencies that can come from there, the petrochemical issues and others, it's a big deal. So there's a lot of positive return. But again, I must add, a lot of people forget, Dangote is in an export processing zone. So typically, he has to sell the crude to Nigeria through other arrangements. So he's not in the Nigerian space in real terms. So it's an export processing zone refinery located. So it's still a way that we're going to still buy with foreign exchange. We will not buy with Naira. And again, I just tell people again that also consider that the man has invested $20 billion in a refinery. Some of it is equity, some of it is loans and others. He has to pay back these things. And if he's buying crude oil from America as he's been buying now, and some other parts of the world, he's buying them in dollars. So the value chain of production in refineries is all dollarized. So when I've heard people saying there'll be 300 petroleum or 250 petroleum, I'm like, no, let's not lie. It won't happen. It's not possible under this context. But it's a big deal.
Now, it's like there's a development in the downstream space generally. If we look at operations in the downstream of Nigeria's oil and gas industry following the PIA and all of that. So how much time are we going to wait for this transition and make the market understand that a big player obviously is coming into the space?
Again, the downstream needs improved regulation. In a very polite way, the NMDPRA hasn't been as strong as it ought to be in regulating the downstream and midstream. This is expected. It's a new organization, unlike the Commission, which had legacy DPR within it and has strength in upstream regulation. So I think there are still many areas where we need to show more capacity, more leadership, and more authority in its regulatory fold. The issues will come up if the PI is well implemented. That's another issue itself. Implementing the PI as ought to be. The big player coming is two things. One of the things we don't want in the country is to have a duopoly. As of today, NNPC is the only major party importing petroleum. That's counter the objectives of the PIA. Now, you don't want a situation whereby Dangote comes in and Dangote begins the only seller of petroleum. That doesn't go for the market. So we still want a market where there's free entry, free exit, and as many players licensed to bring in products, and Nigerians getting the best deal. So the thing is for Nigerians to get the best deal in terms of pricing, quality, and volume. That's what we should do, and the job creation as well. So we don't want one big player take everybody's income away. So that's the fairest express. But again, these are issues that the regulator must deal with. It's within their public to properly regulate that space.
I'm looking at that word deregulation that we've stayed in for. The understanding of a layman, the regulation is that the market will be opened up, attract investment, attract other players like you identified. But with the present state of the market and a bit of price, the pricing issue we still have on one side, how well have we done with implementing the PIA now to the latter, in your understanding?
We haven't done well. We haven't done well at all. The PIA took us 21 years to pass as a law. What missed or what didn't happen was faithful implementation. So there's partial implementation. I mean, let me start with NNPC. NNPC is not truly a commercial company. It's still an appendage of government. It's still such that it acts like a quasi-regulator, quasi-government intervention program, and doesn't really face its commercial reasons. That's one issue. The two regulators, the Upstream Commission and the Midstream, have tried, but again, there are challenges of legacy that in the industry itself. So while the Commission is trying to be more assertive, I'm not sure the industry is regulating NNPC itself well enough, and I'm not sure the authority is doing as good a job as it ought to do. So the PI implementation is one part again. Now, as regards what you said about investments coming in, there are investments. I mean, one thing this government has done properly is a lot of making gas a priority, and there are investments in gas, although there are still infrastructure challenges and there are still market challenges in gas. But they've done that well. Now, with the petrol, I mean, you and I know that there's a lot of subsidy on petrol now. I mean, the liter of petrol is actually about $1, and we're selling it for less than 50 cents. So there's a massive amount of subsidy being incurred by government on petrol. People don't want to invest in a place where they cannot get maximum value for their investment. Secondly, in terms of other issues in the upstream, we have three players who want to diversify or exit Nigeria or others. Government holding the Seplat Mobile deal, the Ajip Oando, the Shell deal doesn't send positive signals to investors. Investors want easy entry and exit. Anywhere you want to put your money into, you don't want to put your money in a place where you can't get out of it. So we've been dealing with these issues for over a year plus, and I don't know why we can't allow people who want to go if they fulfill the conditions around it, and why people want to come in can't come in. So it's a mix. Some good thing happening, but a lot more that could be done.
I'm also going to ask this question. Selling of crude, you talked about our challenge. Of course, we are not meeting up with even OPEC's quota and what we need to get on as a country with regards to crude oil production. But some have also argued, you are the expert here to put us through, that they could sell to local refiners in Naira. That's also something that many have talked about. How feasible is that? And talking about supplying to local refiners, NNPC also has a stake in this refinery. So many would expect that maybe they should be able to get from the NNPC, I mean that's Dangote Refinery, getting crude directly. Is that possible?
Okay, let's start with the first question, selling in Naira. The oil industry value chain is in dollars. You rent your rig in dollars. You pay for your license in dollars. I mean, the parent has reduced the licensing fee for fields this year from normally 100 to like 10.7, but you still pay in dollars. A lot of people who work in that industry bring their money in dollars to invest in Nigeria. So if you say to sell the crude in Naira, somebody must meet up that differential. Secondly, crude sales is what brings about 89% of your foreign exchange in Nigeria. If you sell crude in Naira, where will you get dollars to show up your reserves? Now, every government since I said they will diversify the economy, they've tried, but it hasn't happened total. So we still have crude as the biggest earner for foreign exchange. So once you start selling to local refineries in Naira, then you have impaired your source of foreign exchange. Now, once you have foreign exchange in sufficient quantity, then you might try to sell in Naira. But as of now, it's not feasible. And it's not a business that can happen in real terms. And that's being sincere. Now, on Dangote and NNPC, NNPC's crude is severely impaired by many issues as well. I mean, there's theft. There's the Project Gazelle, the NNPC 9,000 barrels per day deal. There are many other things impairing supply from NNPC itself. And a lot of future pledges. I mean, the economy is in a very bad state. And once you have an economy in this state, and we have only one major foreign exchange earner, then that foreign exchange now becomes a burden. And that's a burden on NNPC, that's a burden on government, that's a burden on the country, that's a burden on Nigerians. So until you have multiple sources of revenue for foreign exchange, then NNPC can maybe not operate as a cash, as a government piggy bank, in other words, and have to do deals for 90,000 for Afrexim, this one for that one. So it's not there. The liquid is not available. It's not there.
Interesting conversation, I must say, Mr. Adigun. But while I still to stay on the economic benefits that some analysts have highlighted for us, the argument of deregulation allowing marketers to source products from anywhere, that's also one argument that has come up in recent times. Is that also the way to go when you have a functional refinery? Let's assume today Dangote Refinery is producing at maximum capacity, but Dangote Refinery is also expected to come on stream. Do marketers still need to source for products outside the country?
They don't need to source out of the country. But again, let's remember again that Dangote is like outside the country, the way it's set up. I think that point should already be made clearly. Dangote is an export-free zone investment. That means it has to have the border issues. I mean, the regulation it's issued to it allows it to sell to Nigeria as if Nigeria were importing from Ghana, Togo, or Republic of Benin. People shouldn't forget that. Now, as per the marketers, people will buy where they get the best deal. If Port Harcourt is producing now, and Kaduna is producing, Warri is producing, they'll go there and buy. I mean, the marketers want to buy where the best deal is for them, where they can pay easily. And if Dangote will sell to them at best prices, as is happening with diesel, they'll buy from him. So you don't have to buy from out of the country. But as of today, NNPC is the only one bringing petrol in because, again, there's a price issue. No marketer will go and import petrol and sell at 600 and 610 naira. He cannot make any profit from it. So if NNPC can bring it in, and NNPC is already set up in a way where it can sort of it can become the only player in the market through NNPC retail, then again, you're shutting out a lot of other people in the industry. But again, what you buy from is not the issues. If the pricing is okay and other logistics are okay, then why not?
Getting really more interesting. That intervention that is coming in, because I also agree with you that PMS should be selling for like $1, and if it's $1, that's above 1,000 naira. So somewhere there is an intervention coming. And I'm worried about how that would affect plans of funding from subsidy removal that ought to be channeled to some productive aspect of governance. But let's leave that part for another day. Now, diesel, we see a bit of drop in the price of diesel when Dangote started to churn out diesel from the refinery. And also, I think aviation fuel, many say Jet A1, the price. So are we expecting to see that with PMS if it happens?
Yeah, I think so. But I mean, Dangote says that sadly, they sell more of their products now to the international market than local market. So Dangote's aviation fuel is cheaper than aviation fuel in Europe. So Europeans are buying aviation fuel from Dangote now. Diesel, again, a mixed matter. There's some very bad diesel coming to Nigeria through some ports in West Africa. Contaminated sulfur diesel. It was in news last week, back and forth, who is doing what, who is not doing what. So again, if you start selling petrol and it's of the kind of quantity, yeah, it can happen. It has a capacity to produce 50 million liters per day. Nigeria's consumption without theft and the mago and all the lies around it is about 33, 34 million liters. So there's enough for Nigeria and there's spare for our neighbors as well. So we can basically take care of the domestic needs and maybe sell to other parts of West Africa as well. So yes, that might happen.
Interesting. You just brought something up now, Mr. Adigun, before we wrap up. The issue of the number of liters we consume per day. This has been a discussion all the while. And even one of my directors here, we always talk about it every time, that how do we consume 60 to 70 million liters of PMS? When are we going to really know what we consume? Well, I think that'll be for the regulators. I know that's what you tell me. But if you answer that too, and look at the outlook for the entire space, as we have more local players in the refining space, what's your outlook for the industry?
Okay, so about consumption, the point is this. When you have a price differential that is so high, you can't stop smuggling. Your neighbors can't sell petrol at 17, 16, and you sell at 600 naira and expect people to keep it here. I mean, if you take a tanker of petrol and put it in a filling station, probably retail it for like a month. People don't buy full tanks anymore now. It's pretty expensive. Most people are buying just as they need. So again, look, normally, if the price of a product goes high, normally what should happen is there should be less consumption of that product. So for Nigeria's arguments of you're now consuming more at higher prices than you're consuming at lower prices, it's a very funny thing about Nigeria. And it's about the weakness of the regulator, the weakness of the borders, and a lot of issues around the country. The outlook is good for Nigeria. I mean, there are about 4 or 5 major refineries in country producing diesel and other products. They're not doing badly. It's not a very profitable business as it is, no matter the economic conditions. But if we can get to the point where we actually dominate the African market. I mean, imagine if we had a serious NNPC many years ago. NNPC would have been taking care of West Africa, would have been the Russia of Africa. But they want to take care of their gas needs, take care of their petrol needs, take care of all those needs. And there's a big market locally as well. I mean, so again, it takes fun. But again, we also must also be mentioning that fossil fuels will not always be in play. And a lot of other things are coming up around the world as well. I mean, particularly the elections in America, the elections that will happen in Britain, the far-right winning in France, all these elections will have an impact on fossil fuels and the future of it as well. So again, something to keep in mind.
I must thank you so much. And again, it's really good to see you, Mr. Ademola Henry Adigun, Chief Executive Officer, AH Consultancies, energy analyst, energy expert. Thank you so much. Do enjoy the rest of your day.
Thank you very much. Thank you.
Well, coming up next on the show,